So it looks like Google is up 40% over the last year, while the rest of the market is up only 30%. So Google is obviously doing pretty good right now. They recently reported their first quarter earnings results for 2024. And so we can see this article right here that talks a little bit about that, where it's titled World Alphabet Stock Be in 1 Year, and they talk about how advertising and cloud business have accelerated again for Google, which are two really big catalysts for Google's stock growth in the future, could end up leading to a higher share price. And then also something else that could lead to a higher share price is they authorized a new buyback plan and also initiated their first ever dividend. And obviously initiating a dividend proves that Google is obviously very confident in their future earnings. Otherwise, they wouldn't have initiated a dividend. So right here, they point out that the stock surged 10% on April 26th to an all-time high, and their revenue rose 15%, with earnings per share rising 62% year over year. Pretty impressive revenue and earnings growth for Google, especially because of how big the company already is. The fact that they're able to grow at this rate even still is very impressive. And as we'll talk about in this video, there are a few catalysts, particularly in the cloud market, that might lead to them being able to grow even more in the future. Right here, they also touch on the fact that they approved a $70 billion buyback plan, which is the equivalent of about 3% of its market capitalization, and also initiated a first ever quarterly dividend of 20 cents per share. So imagine that. Imagine a company as large as Google, $2 trillion market cap, buying back about 3% of its market capitalization. That's, I believe, $60 billion of shares bought back. So obviously, if they reduce their share base or shares outstanding, then their share price will increase because the denominator in that equation will obviously get smaller. Right here, they point out that Alphabet generated 77% of its revenue from Google Ads, which is its primary business. That includes search engine, advertising network, and YouTube. And then also that their Google subscriptions and platform services like YouTube Premium, Google Play, YouTube Music accounted for 11% of revenue, and 12% came from Google Cloud. This Google Cloud part is extremely important because it's one of their smaller operating segments, but it's also one of their fastest growing operating segments. So next quarter or next year, we might see that instead of Google Cloud making up 12% of their revenue, they might be making up 20% or 30% of their revenue. And if it's making up that much of their revenue, but their other revenue sources aren't really diminishing in quality, then obviously their revenue and profits will expand a lot, especially because Google Cloud doesn't really require that much in the way of operating expenses. It's another one of their operating segments where their profits can increase, where their expenses can basically stay the same. Right here, they have a little table that highlights the revenue growth for each of their segments, advertising, subscriptions, and cloud over the last few quarters. You can see that for Q1, as I said, Google Cloud grew the fastest out of all of their operating segments at 28%. Subscriptions were at 18%, and their main business, advertising, was at 13%. So if this Google Cloud segment can grow faster, as it has been over each of the last quarters, beating out the rest of their operating segments, then that'll be a huge catalyst for Google's share price increasing in the future. They point out that the macroeconomic headwinds in 2022 led to a lot of businesses reducing their marketing spending in order to save money to prepare for some sort of a recession or tough time. And as a result of that, Google cut expenses. We all remember those massive layoffs that all of those tech companies went through. And they cut expenses in order to weather the storm. Now that Google's business is picking back up again, they have those reduced expenses while also having increased revenue and profits. So that's obviously very good news for today and also for the future. Also, one of their big competitors, TikTok, might end up getting banned in the United States. And if that happens, then more people would shift to YouTube as a result of lack of alternative products. So that might also lead to an increase in Google's business. So a lot of really good catalysts for Google in the future. Right here, they point out that they aggressively cut costs to counter slowing ad sales, as I said, and also their Google Cloud operating margin more than tripled. It's said in the table above that their cloud revenue increased 28%, but their cloud operating profit actually increased 373%, which I'll be able to show you in their financial statements in a little bit here. And then lastly, they highlight that assuming Alphabet stays on track to match analysts' earnings estimates and still trades at 23 times forward earnings next April as it is today, its stock could rise to about $193 per share over the next 12 months. The stock is currently at $176 per share. So if it increased to $193 or $96 per share, that'd be almost a $20 increase in share price. So that'd be a pretty big increase for Google stock. Now we can see their financial statements. This is their income statement for Q1. And we can see that compared to Q1 of 2023, revenue increased 15% from about $70 billion to $80 billion. And we can see that net income increased about 53% from $15 billion to $23 billion. Pretty impressive again for a company of this size to post revenue and earnings growth in the 50 percentage points. That's pretty impressive. Then if I scroll down here and go to page 7, we can see their cash flow statement. They highlighted that they're going to be very aggressively buying back shares, and that shows up on the cash flow statement. We can see that operating cash flow increased to $28 billion, and then we can see that they repurchased common stock of $15 billion in the first quarter. And then they also repaid debt of about $3 billion. This financing activity section is soon going to include their dividend payouts, as they recently announced their first dividend. So that's pretty exciting. We can see even without that, they're increasing their repurchases of common stock quarter or year over year. So that will also increase their share price. Then if I go to page 2 here, we can see a breakdown of their income statement based on their operating segments. Very detailed look here. Google Search, YouTube Ads, Google Network, that accounts for all of their Google advertising revenue. You can see that pretty big increase came from Google Search and also YouTube Ads. YouTube Ads is especially impressive because for the longest time, YouTube Ads wasn't even profitable for them, and now it's contributing very well to their business. And then we can also see Google Cloud revenue increased from $7.4 billion to $9.5 billion, about 28%. Then lastly, on page 8, we can see their revenue is broken up by operating segment here again. We can see services, Google Cloud, and other bets. And then right here is the big one, the operating income. We can see Google Cloud operating income increased from $190 million to $900 million. Like I said before, that's an increase of 373% year over year. Massive increase here. Once Google Cloud starts picking up speed and getting into the billions of dollars of revenue and profit and matching some of the Google services revenue and profit, then I think that Google might end up being one of those gray rhinos that analysts talk about in the stock market, where you can see it coming from far away, but there's really nothing you can do about it. And in this case, if you're a Google investor, then it's obviously very good news. So now I wanted to look at this DCF model to figure out the intrinsic value per share for Google, and then also just talk a little bit about some of the more recent news that could end up increasing Google's share price. So right here for the DCF model, I estimated their intrinsic value per share to be $341 per share. Compared to their current share price, it means that Google is trading way below their intrinsic value, which means that they would be a good buy at the current share price. Along with this, there are also some other things that could contribute to them being a good buy right now. Right now, among analysts, the average 12-month price target is about $187 per share, which is $10 higher than the current share price. Google is also very well positioned in the artificial intelligence market with its investments in Gemini, the AI chatbot, as well as its integration of AI models into its different products, including Google Search to help improve search results, Google Ads to help improve targeting and efficiency of marketing campaigns for its customers, and then also in YouTube recommendations to help increase watch time and user retention on the platform. Also, they're strongly positioned in the cloud market, with their revenue increasing 28%, operating profit increasing 373% in Q1. Their primary revenue source, as I stated before, is Google Ads, but if the Google Cloud starts entering the scene and becomes more profitable by increasing its user base, then Google's overall revenue and profit should increase with the addition of the excess revenue coming from Google Cloud's market investments. So that being said, the DCF model, obviously I calculated the discount rate using weighted average cost of capital, and then their growth rate using their historic free cash flow growth. And that's how I got to this metric right here. I also compared Google to some of the other companies in their industry, like Microsoft and Meta. We can see based on a profit margin perspective, it looks like Google is doing the worst out of the three companies, which could be bad news because obviously you want to see that a company in a competitive market like this has the best profit margins, which gives them the most leverage. But it could also be a good thing because it shows that Google has more room to grow their profits in the future. And if they do, then their share price will have a dramatic increase. So that would be really good news. And then lastly, we can see Google compared to other companies that I've looked at on this YouTube channel so far. In terms of intrinsic value, Google comes in 4th place. They're trading at 52% of their estimated intrinsic value per share. We can see for growth rate and dividend, they weren't good enough to get onto the top 10 list for growth rate or dividend on this channel. For gross profit and net profit, they had about a 56% gross profit and a 24% net profit, so that puts them in 8th place on the net profit table. And then for year-over-year revenue and earnings growth, we can see that for Q1, they come in 3rd place with 15% revenue growth and 2nd place with 53% earnings growth. We can see they also showed up on the Q4 year-over-year revenue and earnings growth tables here, and then also on the Q3 tables. So quarter to quarter, it seems like they are very competitive with a lot of the companies in the stock market. So that's obviously good news. It shows that if you're not sure if you want to invest in Google or another stock, Google seems to be producing very competitive revenue and earnings growth across all industries and across all companies. And then lastly, for stock performance over the last 5 years, Google is up about 208%, which is not good enough to get them onto this table. We can see Super Microcomputer at 3,000% and NVIDIA at 2,000%, Tesla at 800%. Those are the 3 companies to beat. So let me know in the comment section down below what you guys think of Google stock. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.